Okay, we'll see if this works. Hello everyone, welcome to the live video for the Gamma Optimizer room. This is a really tough one because I have to, really rig something here. I have a failure on my computer, my internet, everything. So I am on a laptop with my phone, sharing data. So we'll see, we'll see how it goes. So I guess Louis, you can hear me. That's perfect. So let's just start right away, and as people start coming, then hopefully they'll be able to ask questions and the things. But I'm glad that the stream seems healthy. If you have issues hearing my voice, just let me know. Okay, it looks healthy for now. Okay, so let's start with the presentation. Okay. In terms of close positions, remember this is a meeting that was late. It was supposed to be last Friday. So last week we actually had a better week with 2 wins, one neutral and one loss. No, so it wasn't that bad. And in fact, the week was a profit. No, for all of the craziness, we actually managed to extract $200 from the market. I don't know how, but we managed to extract some money. But we closed the month with a loss of more than $1,000, 1,178. No. So this week, we started with one loss yesterday and also very likely lose today. No, it is the nature of the beast. The market seems to be, the buy the dip seems to be too strong. We are so close to the limit. We are extremely close to the limit of the trade, and it is likely, unless the short squeeze has ended. But usually, short squeezes don't end in the middle of the session. Short squeezes tend to prolong all the way to the end, at least at the beginning of the bear market now. So everyone was short yesterday, and I guess they were short during the overnight session. So I guess that's what happened now. What happened is that everyone goes short, and then a small short squeeze happens, and until they get out, the short squeeze is over, the market will continue going up. No? So that's how it works, and that's what is happening today. So we'll see. If we are lucky, maybe the short squeeze ends by 3 p.m., but it's usually is always all the way until 4. Also, a quick comment about short squeezes and bear markets. If we are indeed in a downside leg of the market, which it looks like now, for all of the craziness, the market has been going down consistently, little by little, but it has been going down. And that's kind of the path. The market goes down, it drifts down, then a massive squeeze to the upside, then keeps moving down, and the squeeze, and it's a cycle. If you look at what happened back in 2008, you will see that that's how the bear market happened. And the same thing in 2022, you will see that we have the same dynamics, where the market was, coming down, drifting consistently, and then bouncing a little bit. Okay. Also, for reference, out of curiosity, Leo Profit actually benefited from in February. I don't know what was different. My guess is that maybe Leo Profit is less sensitive to implied volatility. But Leo Profit managed to actually make money, and good money, like $100. No, it wasn't that bad, the money. And he actually is also making money this week, which is interesting. So something to keep an eye on for now. Okay, so let's see what else is in store for today. In terms of the market regime, the GT level is at 6,873. At least it was when I prepared the slide. The market remains in a short gamma regime. Also, last week we spent the full week in short gamma. It was very interesting. We spent the whole week in short gamma. The market was unable to reclaim long gamma at all. And I guess everyone was expecting the geopolitical event, the war. So I guess that was one of the reasons. This week, the imbalances are decent. If you go to the variance center, you'll notice that so let's go to the variance center. Here is so easy to go to the variance center. So if we go to the variance center, you'll notice that the imbalances are actually really low, 22 billion and 68 billion. But they were gigantic early this morning because early this morning we were down 2% and we are only down 1% right now. So this is the massive short squeeze since 10:30, I guess. So GT level and the balances are not that big. The market is it's not even 1% below the GT level. The market is right there. So not an issue for now. Okay. Uh, so, so I guess that most of the volatility that we're seeing at this point is coming from organic trading, no? And the short squeeze, of course. And I guess I added this, given the strength of the buy the dip crowd, I will not be surprised if we close flat. Like yesterday, we closed by just a little bit green. So everyone is buying the dip, and most of them are being forced to buy the dip. But I guess that is buying the dip. No, it is a strong phenomenon. There's tons of cash and is being deployed. We'll see how long it lasts. No, also as reference, no other geopolitical events that had happened. Even though there is an impact in near-term volatility, it just basically has no impact on the market at all, because most of the S&P 500 companies have no exposure to the geopolitical event itself. Other than the energy companies, I imagine that in the energy space there is going to be lots of volatility, and also shares going up nicely because of the prices for energy now, for oil, they are going to be expensive. But for example, technology and artificial intelligence and software, those things are really not related to what is going on. Also, Iran was not like a big customer of the United States, so the impacts on commerce are limited, and that's why the market seems to be not to be bothered by what is going on right now. Okay, and if you look at the close-to-close volatility, you will notice that it is actually very subdued. No, RB20 for the last month is 13.4, which is high, but it's not crazy. RB10 for the last 2 weeks is 11%, which is actually low. No, 11% is not that big. And RB5, the volatility for last week is 10.6, which is also like nothing crazy. It's not like really crazy right there. So despite the crazy action or the crazy intraday action, close to close remains really subdued, and that disconnect between the two worlds remains. No, the disconnect between intraday minute-to-minute volatility and close to close volatility remains. That's something very interesting. What is happening? You know, where the market barely moves. When you look at it from 4 p.m. one day to 4 p.m. the next day, versus what actually happens now. And I guess that's one of the sources of underperformance of constant stable, now the disconnect between the two worlds. VIX, well, VIX is around 22.9 when I prepared the slide, probably a little lower now. It's elevated, but it's moderately elevated now. We saw it spiking towards 27 this morning, but as I mentioned, in a conflict, in particular when the conflict is far from the United States, now, like the effects on the market itself should be really little, so we should not see effects on the market, and VIX should not be jumping gigantically, to 40 or 50 or 60. No, it's not like, unless something starts to happen in American soil, no, that's a different story. But as long as this conflict remains far away, then I don't think there's going to be an effect right now. 1 week VIX is at 22.1 and it's also very elevated. Dealers are really cautious about the geopolitical situation. They are not going crazy. They are just pricing everything constant across the curve. I am still at the variance center? No way. So something happened. Oh, so let me put it like this and see if it works. I forgot to switch it. So thank you. Thank you, Lou, for letting me know. Can you see it? Hopefully it is working. Okay, so 1 week VIX is at 22.1 and it seems to be elevated. It seems to be flat. Now, judging by this, is actually really flat. Okay, so sorry about the slide. You have all the information here, I just say, about the RB20 and cluster volatility and all those things there. So let me go here. In terms of the term structure, you can see the term structure is completely flat right now. And it's a sign that dealers don't know how to price risk. No, usually a flat term structure means that dealers are at a loss how to price risk. And so basically they just overprice everything across the term structure. No, it's not like when they think the events are going to be short-lived, then they tend to overprice on the near term. But no, everything is overpriced, and its flatness is kind of the name of the game right now here. No, but overall, if you look at where volatility is, dealers have reacted to this war with, let's say, some calm. You know, they are overpricing a bit. They are elevating volatility to 22, 23 across the whole curve. But it's not that they are fearing the end of the world or that the markets will collapse or anything like that. No? So that's the situation here. Muted reaction, I guess, is my comment. You know, for now, it's very early stages and we don't know yet. But of course, these things could get worse, or the geopolitical event could just fade into the background and be one of those things. Now, for those of you that are as old as me, you know, you will remember the endless conflicts we used to have. Now, the Iran-Iraq war, Afghanistan war, all those things always going on there, kind of going on the background. I don't know if this is going to be one of these things or this is going to be brief. So I guess dealers are also giving it time. That's my guess. They're giving it time to see what is going on. So yeah, so options are kind of expensive across all term structures. They are not crazy expensive, but they are expensive nonetheless. Okay, in terms of realized variance, this is the interesting thing. This is the intraday realized variance. And you notice that for the last 3 sessions, which includes Thursday and Friday and yesterday, intraday realized variance has been actually very low. It has been around below 12. No, it's just above the magical 10%, but below the magical 12. Also, no, so something going on there now. That means that liquidity is actually plentiful for what is going on. You can see VIX trending up and up and up, and yet liquidity in the shares is actually not that bad. No, so the war itself, I don't think has affected liquidity at this point in the market. So it looks healthy, and if we look at what is happening today, we also see that intraday realized variance is not that bad. No, we look at and see it here is around 16%. It's a little higher than yesterday, and 19 for the last half an hour. So I guess this is more of the short squeeze that I mentioned. Like someone was in a hurry, like a massive red dot here. Someone is in a hurry to buy around 2:37 p.m. No, they are really trying it. So, and this time I will not forget coming back to this one. So, realized variance means that the liquidity situation is not bad. No, so for those of you that is expecting a massive crash in the market, I don't see it. I don't see how it can materialize because liquidity remains plentiful. Now, the first people to really run away, like jump the ship are liquidity providers, and they seem to be providing liquidity. They seem to be happy providing liquidity. Variance risk premium is a very interesting story because it remains slightly positive. That means that dealers are not overpricing tremendously the options, and also means that the actual realized variance hasn't been a surprise. No, it's not that they were taken by surprise or losing money. It seems to be in a nice equilibrium. At the point where variance risk premium is at a point where it's really hard to have an edge right now, very hard. I will say the edge remains buying tails, but tails are not working. For example, there is a mysterious force that is driving the market to flatness, to whatever was the closest point to the previous close. I guess it could be some kind of a strategy, dispersion strategy going on that has a side effect of creating a very a little movement at the end of the day, but intraday is a lot of movement because they are dispersing the trade. Now they are selling the basket, buying other things, and then the net effect of the dispersion will cancel out, and the market will be flat pretty much. So variance risk premium, not an edge for any particular trades right now. Okay, and finally, ambiguity. No, ambiguity is the same thing, continues moving down. It's not an issue at this time at all. No, so this is another sign that a big crash in the market is not really imminent. No, because ambiguity hasn't had the time to reset and go all the way back to 0.2. So. And then to make this really, really short, the trade plan, the ultra constant stable is the only system, but man, is having trouble this year. It's very interesting across all the data I have. I don't think we have seen such a terrible month like at all. No, I think last February was the worst month in his history. Although maybe there was a period before that I didn't analyze. For those of you that have the full data set, you can see the system had a monthly loss higher than the one that we saw in February. If not, it's very close. No, it's very close to the maximum loss. But I'll keep it because it has proven that it works. Also, I'll keep an eye on Leo Profit just in case it comes back. No, it might come back at some point, but who knows? Sorry about that. And I think that's it, folks. It was a sweet and short meeting. Hopefully by Friday I'll be able to do it with the normal computer, with the normal internet, not having to do this emergency. I guess a fan failed on my computer. That's a very interesting failure. No, just a fan stopped working, and so none of the software that do live streaming works because I guess the CPUs get really hot, so the computer doesn't work. So I have to do it from my laptop. And also right now, for some reason, my internet was not working, so I have to do it on my mobile phone. So I apologize for quality issues here on the sound or video, but hopefully for Friday, everything will be set. Okay, thank you very much. Thank you, Louis, for being here. I guess I don't know if you were the only person in the meeting, but at least the recording will be available for you guys. Take care, everyone, and I'll see you in the room in a little bit. Bye-bye.